what I wanted to do was connect with you guys so that we could talk to our clients and we could talk to our friends here and in our social media family and really just give them some guidance, right? And this is catered more towards the people that are renting a home, those that are thinking about buying a home and are asking yourselves, is now a good time to buy? Should I wait? What should I do? And really, David, as you and I have talked about before, that's not really a one-size-fits-all answer, right? It's something that is case by case. And so this Zoom meeting is we're getting together. We're getting 3 masterminds together so that we could really guide you on how to make that decision. And we've decided to call this the 5 things you must do to help you get ready to buy a home, right? So once again, it's going to be case by case. It's going to be 5 things you got to do to help you get together. And it's really introducing you to the 3 of us who are here to help you and guide you through what that's going to look like. So, why don't we take a quick minute to introduce ourselves? Gentlemen, David, I'll let you start.
Yeah, my name is David from Providence Mortgage, the owner, president, and founder. Our specialties is that we are a wholesale broker. So essentially, we do the shopping for the clients to match the clients with the right product, with the right lender that will be most cost effective and most efficient in terms of getting to closing. So we're kind of like the one-stop shop when it comes to shopping around.
Very good.
Thank you, team. This is Tanvir Aziz coming live from Eastern Title. When it comes to Eastern Title, we like to be the friendly title company, which what it means basically being adaptive to any situation and get your purpose served. So regardless of what we are doing, we have number of audience, right? Realtors, and at the same time, realtors, buyers or sellers. What we ensure at the end of the day, your smooth closing process.
Beautiful. Thank you, David. Thank you, Tanvir. And of course, everybody knows me, right? Mario Padilla. I am with RE/MAX with the Padilla team. And like I said, I wanted to get my friends here together so that we could talk, have a candid conversation. One of the things that I'm going to ask you guys, this is interactive. If you have any questions, please drop them in the comments. We're monitoring the comments here. That way, if you have anything that we can answer, please drop it in and we're going to address it today. So, let's go ahead and get things kicked off, guys. So once again, topic today, 5 things you must do in order to get your home buying process started. So what we have on the number 1 today is going to be very simple, right? And that's going to be the hardest part, what we call the hardest part to getting this whole process started, and that is the pre-approval, right? So the pre-approval, and for that, I'm going to turn it over to David to talk to us about the pre-approval. Tell us what that looks like, what documents you need to get together, and we'll elaborate a little bit as far as what those documents do and what the purpose of collecting them is. So David, take it away with the pre-approval.
Yeah, thanks, Mario. So essentially, when it comes to pre-approving, we're looking at the buyer or buyers as a whole. We had to look at the credit report. We're looking at the tax returns. We're looking at employment. We're looking at income and assets. So depending on your particular situation, whether you are a W-2 employee or 1099 self-employed business owner, the income documentation could look a little different. But when it comes to assets, we're just looking at bank statements. So we got to make sure that we have at least 2 months of bank statements that shows enough assets in there for your entire transaction. There are certain things that we need to be watchful of, like large deposits. You can't have a deposit greater than 50% of your monthly gross income. Otherwise, they're going to ask you, where did you get the money from? Now, as long as you can provide proof that the money came from you or it came from somebody or some employer or some contract job, as long as it can be documented, we're fine. But if it's, wired from the North Pole, Santa Claus, then obviously we can't have source of income. So we're looking to see that the assets that you have are verifiable. We also had to verify your employment. This changed significantly due to COVID. Now the verification of employment, we have to check with the individual lenders on how they interpret the new guidance that we are receiving. But essentially, we're going to lean heavily on what your employer says about your employment status. Because we understand like some people are either furloughed, but they still have a job and they're going to be returning to a job. So as long as the employer says they're still employed. Their employment is still, indefinite. And, whether they're furloughed or not, that's not going to be asked, but we will still need pay stubs to show income. Now, I know in this special circumstances, when people have lost income or have reduced income, there's, the lender will put that into consideration. The whole point is, if you're a W-2 salaried person, very clean cut and simple. If you earn commission or hourly, then those are called variable incomes. We've got to kind of walk carefully and make sure we're calculating that, accurately. And if you're self-employed, man, we got to look at tax returns, just the last 2 years of history. So those kind of things, we definitely do a lot of homework in advance. So, once you're pre-approved, we're going to stand by our pre-approvals 100%, because we put our due diligence and hard work up front so that we're not, surprised with anything along the way. The last thing that we want to see is you under contract and the underwriting saying you're denied. That just hurts a lot of emotions and affects people with their desires and aspirations to get a home. And it wastes a lot of people's time and money. So we're just trying to be effective and efficient in our craft. And just, as long as we have the documents in order and the credit report looks good, we should be able to pre-approve you.
Very good, David. So just to kind of recap what you said there on the pre-approval. So things are folks need to get together while we're sitting at home right now, right? So taxes for the last 2 years, pay stubs. What do you need for pay stubs?
The last 30 days.
The last 30 days worth of pay stubs. So we need their W-2s or their 1099s, and then bank statements to show how much assets they have currently available, right? And if you're a business owner, you're going to need everything for both the business and the personal.
Yep.
All right.
Last 2 years filed tax returns.
Yeah, correct. Your filed tax returns. And if you have any questions, make sure you reach out to us as far as what specific documentation you may need. And once you get all those documents into David, he's of course going to need to pull credit to check your credit report, see what kind of debts and liabilities you have against you. So wrapping up, number one is the pre-approval, right? We need to get that in place so that we could follow the rest of the steps. And we'll move on to number two here, which, while we were talking about it, the second thing that you have to do once you get pre-approved is to determine your budgets, right? You guys would agree with that, that determining budgets is probably one of the most important things that we can determine after the pre-approval, because that's really what's going to drive which direction as the agent I can take you in, right? Would you guys agree?
Absolutely.
Yeah. So a couple of things that we set together, and determined for budgets. So number one, we need to determine your budget for your monthly payment, right? That's going to be very important because as David will tell you, that's going to be what really determines the type of loan program, the amount that we're going to need together for down payment and closing costs, because that monthly payment is going to put you in a bracket, right? Right. So, so number one, we need to get that monthly payment in line. Number two, we need to figure out how much money you're going to need for down payment and closing cost. All right. Number three, kind of thinking down the road, we need to look at what kind of expenses you're going to incur with moving, right? So if you currently have a lease, do we have to break that lease? And if we have to break that lease, how much do we have to budget to break that contract, right? Do you have to pay an extra 30 days or 60 days or whatever it may be? Obviously, movers come into play, which I'm going to give a shameless plug here to my guys at Moyer and Sons. What's up, Moyer and Sons? But movers, so movers come into account, and we need to know how much money you're going to spend moving. What else do you guys think that we have to get budgeted?
Well, if there's a house that they really love, but it's just full of potential that's not actualized, then there's a reno budget. The good news is there are renovation loans where you can, add a certain budget with a conventional loan or FHA, so you can finance your own renovations and have one lump sum payment instead of having to set aside a certain amount of cash that they might not necessarily have to build a kitchen that they can't afford. So having a renovation loan just gives them that, that leverage and the flexibility to work with their current assets while financing, the entire project with the purchase and the renovation.
Yeah, perfect. So that's another good one, right? If we determine that price point that you're going to be at is going to need some renovations, going to need some updating, we definitely got to budget in for those type of things. So, wrapping up, our second item to do here is once again determining your budgets and just recapping monthly payments, closing costs, down payment, any expenses that you're going to incur before, during, and after your move, and then renovations and fixing up of a property. So sounds good to me. Very, very straightforward. Then the third thing that we want you to have in line and that we want you to start planning is your timelines, right? Because that's very important. You need to know if you're going to be moving in the next 2 weeks or if you're going to be moving in the next 6 months. And so determining that timeline is going to be able to help you do a lot of things, really. It's going to open it up for, once again, for planning for the time it's going to take you to shop for a home, the time it's going to take you to get a property under contract, to get it to close, as well as the time from closing to moving and everything in between, right? So really that's important. And I'll turn it over for David, to ask you the question. Once we've got somebody that's found a home and they're under contract, what's the average, right? The typical time frame that it takes to get somebody from beginning of contract into the home. And obviously with what we're dealing with right now, those time frames are going to be extended slightly, but the average time frame, what would you say?
So we're still trying to figure out what the new average is right now. Prior to this whole COVID shutdown, we were averaging closings around 20 to 25 days. Most contracts typically are written for 30 days, so we're actually just kind of waiting after everything's said and done just to meet the closing date. But with this new COVID, some of the delays would be, again, verifying employment. Are the employers easily accessible to verify the employee's employment? The IRS, they're shut down, so we can't obtain tax transcripts, which are required for most loans. But there's a way to circumvent around that we've received guidance on, but that could delay it also. Third, the appraisals might be a little bit more challenging because now we're still seeing a lot of purchase transactions in the spring market. Some appraisers don't want to go in. Some people are hesitant to allow appraisers to come in unless they're totally vacated the house. So some of those things might delay the process. I'd say maybe 7 days in total. So we're still looking at maybe a 30-day closing window for a transaction once under contract to closing.
Okay. Yeah. Right. Which is exactly why we talk about, right? We need to set those timelines, because if we know that, a transaction is going to take somewhere between 30, 35 days, potentially less, potentially more. I'm actually dealing with one right now that we had to set a 60-day timeline on, which actually ended up working out better for our buyer. But, we want to make sure that we have all these points up front. So then that way you're not caught in a position where you're scrambling or you're trying to figure out what has to happen because you have to leave your apartment by the end of this month, but the process is going to take 90 days when you thought it was going to be a lot quicker. So, guys, once again, really important to get those timelines set in place so that we could get everything in order. So for those of you just tuning in, I'll just do a quick recap. We're talking about the 5 things you must do if you want to buy a house. All right. So number 1 is going to be to get you pre-approved. Number 2 is going to be to sit down with us to determine your budgets. Number 3 is going to be setting timelines for the process. All right. Number 4, and one, David, that I know you love talking about, is avoiding certain things during the process, right?
Yeah.
And these are what we call the low blows in the transaction. So, Tanvir, I see you smiling over there. You know what I'm getting to. But there are certain things that we must avoid during the process. And I'm going to turn it over to David to talk to you about this because he loves drilling this info into you.
I mean, this is one of the earlier conversations that I had with all my prospective buyers, because the story goes, I'm ready to go to closing, but I bought a car right before I signed the papers on the house, and now I'm not approved. So Number one, don't open any new line of credits or take out any new loans until you go to closing. Yes, you might need the card, but you might need to Uber it until after closing. You might have to figure it out, a different alternative, because once we add debt and your creditor or whoever we get the loan from pulls your credit again, that score could lower, that pull could lower your score. It can impact your rate, and adding debt to your profile can knock you out of qualification, and we just wasted tons of time and the borrower's money paying for the appraisal and the inspection, which could be easily $1,200 to $1,500. Also, don't quit your job. I mean, that sounds like common sense, but it's super important nowadays. Some lenders are doing post-closing re-verification of employment. So as long as you're employed through closing, or at least until the day of closing on purchase transactions, we'll be fine. But if your employer says, yeah, they're working until, like April 30th, but May 1st, they're leaving our company, we're done. So I mean, if you know in your mind that you're going to leave your company, don't let me know. Don't let your employer know until after you buy your house. Otherwise, we have to figure out what your underwriting is going to look like, because we can use future income. We can use income based on a new contract offer, but talk that out with us before you make any kind of move, in your employment. And along those lines, don't reduce your income either. The more income that you can qualify on, the higher, higher loan amount that you can have. And if you lose your income because of a furlough, again, that's a little leeway that these lenders are offering nowadays because of this ongoing shutdown. Fourth, don't close your credit. So you might have some line of credits that hey, I'm going to pay it off and I just want to get rid of that credit. Don't do that, because credit is determined. One of the major factors is how much credibility do you have in terms of how much will banks or lenders be willing to offer you in terms of credit. So if you shut all your credit and you have no credit cards, you have a bad score because you're not entitled to any credit. So the more borrowability that you have, the more buying power you also have. All right. And lastly, make payments on time. I know with this whole stimulus package, with the mortgages that you might currently have or with the rent that you're paying today, we got to really look into what forbearance really means. The good news is, if you're not able to make payments for the next 2, 3, or 4 months because of your financial hardships, the lender will not report it to the credit bureaus. Your credit score will still be intact, but you're still going to pay that money somehow. So I don't want to go too off tangent on that, but the whole point is, if you owe money, if you can, keep the payments in line and on time so your credit score does not get impacted with these late reporting.
Yeah, on that note, allow me to share a real life story, right? So when you are applying for a credit and you're getting pre-approved, please be cognizant about the accounts that you showing on your credit history, because not only the accounts shows your name, but sometimes you may have added your loved ones as an authorized user. You may not be using your card or those accounts for that time being, for that interim period of 30, 60 days. Just stay on top of it so that you know what your other loved ones are doing with the same account that you're sharing. Because the moment, guess what? The moment that card swipes somewhere else, and it reflects your credit balance next month. So this is something that I learned a few months ago. I'm like, you need to know how many accounts showing on your credit history and stay on top of it.
Yeah, good point. Good point, Tanvir. And I know we've ran into those issues in the past where somebody has done that, and all of a sudden we check their credit during the process, and we see that an account has gone up by $1,000 or so, and it turns out that it wasn't the person that was applying, it was a spouse or a family member. So that's a really good point. Thank you for adding that. And the other thing, guys, that didn't get mentioned, but really important, right? Whenever anybody's looking for a home or in the process of buying for a home, they're excited. They go to IKEA, they go to furniture stores and things like that. And a lot of the times they'll get excited and they'll pull the trigger on some of those things a little too soon, right? So we always recommend hold off on buying furniture, hold off on buying, accessories for the home until we've cleared all the major hurdles, especially credit, right? Credit, David told you, it shouldn't even be in play. But, a lot of the times we've ran into issues where borrowers have cash and, David may have told them, here's how much money we're expecting. They have a little bit more money over that amount that David stated. And they'll go out and they'll buy some furniture, and it'll turn out that, something along the lines may have changed and they may need those funds. And so, we urge you, don't jump the gun, right? Wait until you're in the green to go out and spend on furniture and on cars and on anything else that may be in play, because it's really important that we get through the process without any additional hurdles on top of what's already in play. And and Tanvir, where does a title company come to play in all this, right? Because obviously we've been talking a lot right now about the real estate side and the lending side, but obviously you're with Eastern Title, and explain to us a little bit about that process.
So we work very in the close. So I call it the three spectrums, three pillars of the entire ecosystem: lender, realtor, and title companies. Title companies' job to make sure that it's a smooth transaction as soon as the contract gets ratified, right? So ratification means when the sales offer has been accepted by the seller and buyer, duly signed. Once it's ratified, the contract comes to us, and we actually look at the origination of the title and also validate the title is good to go. The ownership is ready to be. There are a number of phases, 9 steps of this title. What are the things, recordation and everything that we look into? There are 9 steps. I'm not going to go into detail. That's one way we, as a title company, our job to make sure the transfer of the ownership will take place as smoothly, and we take the liability for it. And there are 2 things we look at: the title insurance, meaning insuring the house that you are buying. God forbid something comes, you are absolutely liability proof. So what I mean by that, the insurance that you buy on your house, it covers your house. That's title package 1, if I may say, and title package 2 if there are capital gains on that house, because people tend to stay in a house for 10, 20, 50, 30, 40 years, right? And there will be gain in the house. So title covers on both spectrum of this. So again, 2 sides of the title: smoothing, making sure the ownership is completely transferred to you and to your loved ones at the same time, and also what should be the title insurance coverage that you need. So we sit right after the contract gets ratified, we sit with the realtor as well as the buyer, and we disclose all this information.
Very good. Very good, guys. So once again, quick recap, 5 things, right? We're on number 4 right now. So get pre-approved, determine your budgets, set your timelines, avoid doing all those things that we told you. And then once everything is said and done, the big one that we come across is really, once we've determined the budget and everything else, is setting your needs versus your wants, right? And this is where it gets tough for us, because especially here in the DC metro area, prices are high. Prices are high, guys, and
competitive, very competitive, yeah.
Very competitive marketplace all the time. Prices are definitely not what people expect when it's their first time, or whenever they're used to a certain living situation. And we see it all the time. I know, David, you see this all the time. Tanvir, you on a personal side have seen this as well. A lot of the times we'll get folks that come in and their expectation is that if they're going to pay $1,700 a month, they want to get the nice big single family house with the 2-car garage and the fenced in yard. And, that's not the reality in a lot of places, right? Which is why for us, it's very important to get those budgets and that pre-qualification in place, because once all that's done, we need to come up with what it is that you want. And a couple of things that we always like to start with, number 1, and very, very important, number 1 is location.
Correct.
Right? Would you guys agree that that's probably the first question we want to ask is to our borrowers is, where do you want to live?
Yeah, I mean, just based on location, that can drive the, other aspects of, how much can I afford in this location? And if I can't, then I got to look at a different location. So that's absolutely on number one on my list as well.
Yeah, absolutely. And, once again, whenever somebody tells us, hey, look, I want to live in the city, I want to live near a metro station, I want to live, near this big development or big area, we automatically know that the price is going to go up, right? So number one, like I said, is location. Once we get to location, now we could start talking about what you need, how many bedrooms and bathrooms, right? Parking. Do you need parking? What kind of parking? Off-street parking, driveway, garage. We go into size, right? Property size, lot size, condition of property. David touched on this one a little bit earlier. Condition of property is very important, right? Because buying a home it's like the stock market, right? Anytime we're going to talk about investing in the stock market, the first thing your advisor asks you is, what's your tolerance for risk, right? And that's pretty much the same thing that happens here. Whenever you're shopping with a home for me, one of the questions that I'm going to ask you is, what's your tolerance for home improvements, right? Are you a handy person that's not afraid to pick up a hammer and knock out some walls? Or are you the person that wants to walk into this house and, just bring in your toothbrush and your bed and be ready to live in it, right? Because it's a very different thing for everybody. So with that said, we need to determine what you need or what you want as far as condition. And condition, I'm going to turn it over to David a little bit, because one of the things that we really encourage a lot of our clients with condition is to take advantage of some of the programs that are out there. David touched on this a little bit earlier, but I want him to give us a little bit more of a detailed description about some of those renovation or construction programs that he talked about.
Yeah, so typically, these loans have their parameters that align with just every other conventional or FHA or even VA. There's renovation loans for VA borrowers as well. So let's say, for example, if you want to buy a house and the house price is $500,000, but you want to put $100,000 into the house to make it into your dream home. As long as you're doing the fixes and repairs that add value, because we have to get a contractor's quote, we have to look at what the current value is and what the after renovation value is as well. And then from there on, you make a down payment based on your total loan amount. So in this scenario, if you're purchasing something for $500,000, you want to put $100,000 of repairs. On the conventional loan side, you can put 3% down of $600,000. On the FHA side, you could put 3.5% down of $600,000. And on the VA lending side, you can finance everything because they allow you to put zero down on VA loans. So the one thing that we have to consider is some of these costs of repairs, if it's structural or non-equity building, such as, I want to build a pool. That won't be allowed in this particular product. I have to beef up my structural foundational wall. While that's important, that won't necessarily add value. But if you use this money to renovation budget to redo an outdated kitchen, take down some walls, hire a structural engineer to make sure it's sound, and you have it all played out. So it covers everything from permit costs to soft costs like engineering, architectural drawings if necessary, even soil samples depending on the scope of the work. So all these hard costs and soft costs can be included. It's just a matter of what your needs are going to be and to see what improvements will actually increase the value of the property.
Yeah. Tanvir, you got anything to add?
No, yeah. So as you said, I'm a real example of to this, right? First thing is, your realtor is your trusted advisor. Your realtor is your brother. So you need to share not only need and want, you have to make sure communicate in a way so the realtor can help you with this information. When I was looking for a house, location and school district, these two things were my primary thing. I had to let go the number of bedrooms I needed because the budget that I had, I could not accommodate that budget for the number of, in that area I was looking into, the number of bedrooms. So I had to let go. And this kind of conversation only took place when we know also what the needs are, what the priorities are, and as well as what the wants are. We want everything at the end of the day, right? Who doesn't? But again, it just helps both of you to make a decision and also address the timeline. Remember, majority of the time there is something, either you're moving out, there's a moving expenses, there are school is starting or whatnot, right? So it's just collectively, it helps to make a decision. That's from my experience.
Mm-hmm.
Yeah, absolutely. And, you know, school districts, since you pointed out school districts, I'll tell you a little bit of insight on school districts, right? Because, you know, that's probably one of the biggest questions that I get as an agent. Whenever I start working with somebody, people always tell me, you know, I want to be in a great school district, or I want to be in this school district. And really, you know, like we said, number one, location and price are going to determine a lot of that, right? Because if there's a school district that you want to be in, but it's just outpricing you, there's really not a whole lot that can be done. And that's where some of these renovation options may come into place. Let's say, for example, the home that you're looking at, if it was all said and done, is in a school district that the average home is selling for $700,000, and you know you're not going to be able to get there, well, then maybe that's where we start to look into some of these options where we can buy something that's distressed, get it at a discount, take advantage of some of the renovation programs, and be able to get you into that home without, you know, paying top dollar for it per se. The other thing is school district, right? And what I tell my clients is that school districts, you know, you really have to get proactive with this. I can't tell you what a great school district is, in my opinion, and I'm sure a lot of people will tell you this. Whenever you go online and you look at school districts, you're looking at a number. And what does that number mean, right? You know, I'll give you my example. I live in a school district that we absolutely love. But if you jump onto any of the real estate websites and take a look at the school district, the ratings are like a 4 or 5.
Yeah.
But we love our schools. You know, I mean, I wouldn't trade our schools for anything. Our teachers are, you know, the folks that are around us are amazing. So there's a lot more to a school district than just the number that you see online.
Yeah.
Obviously,
go
ahead,
ahead,
David.
on that number that you're talking about, because these websites that you find the school ratings, those are people's reviews. They don't really have a metric in terms of, you know, performances. So if you want to actually look at the performance of the schools, you got to go to MCPS, you know, their website, look up the individual school. But there's also other parameters that you want to look at. You might want to be in a school where they're hyper focused on academics, but they're so homogenous in terms of the demographics. Some might want a more diverse experience and send kids where the performance is not so cutthroat and their kids can thrive in that environment. So you got to really look at your personal needs and don't rely on the scores, because those scores are parents going in and saying, oh, I love this school, or I hate this school. Your example there, Mario, you love your school. You feel like your kids are thriving there. Hey, man, that's all we can be, you know, looking for.
That's it, right? And one of the things that I always encourage my folks is, you know, and once again, to come back to the beginning, this is why it's important that you follow this order of events. Because once we are able to determine how much you're pre-approved for, your budgets, your timelines, your location and everything else, now you can start putting in the legwork to determine, okay, I know that I qualify in these 3 areas, and the schools that fall into these areas are 1, 2, 3. Now you can do the legwork, go visit the schools, get involved with the community and what it is that you're going to be dealing with on a day-to-day, because really that's what it's about, guys. It's not about that number. And that number is important, right? It's important for all of us, because in the back of our mind, we don't want to be in that school district that's ranked really low. But, you know, once again, there's so much that goes into that. So important to determine those needs and those wants, because the more clear we're able to get with those needs and wants, the more intentional we can be as a team collectively here to help you achieve that. But if we just jump into things and we don't know any of these and we just want to, you know, get excited and go out and start shopping for homes, it's very difficult to achieve any of those things, right? So just a quick recap here of our list of 5 things you should do if you are looking to buy a home in the future. It is number 1, get a pre-approved. Number 2 is determine your budgets. Number 3 is to set your timelines. Number 4, lots of things to avoid, right? We gotta keep drilling that one, right? Because once we have those first 3, we gotta avoid that. And then number 5, once we have that said and done, we wanna have your needs, we wanna have your wants, and we wanna help you be successful in the purchase of your home. So, you know, that pretty much does it for our list here. I wanted to open it up to you guys for some thoughts, some advice, maybe some just some experiences on what's going on over the last couple of weeks that you guys want to share.
Well, I do want to add on the renovation side of things that I should have included earlier. Most of these renovation loans do allow you to add in 6 months of your mortgage payment into your loan amount. So if you're, you know, in a renovation and you can't live in there during a renovation, you can live somewhere else and you're not paying 2 mortgages or 2 rents or any 2 housing payments. So that could certainly be helpful.
Very good point.
Absolutely. And so we are adjusting to the new normal, and we should address it, right? Business, to be honest, is as usual. Remember, from the lending side, from a realtor side, we're still signing DocuSign. We're still putting everything to pull up your credit online. Those practices have been there. It's just the shaking hands we are trying to do over online nowadays, okay? I'll send you my PRL still, all right? So, but the thing is, what I'm trying to say, if you look at the numbers, week over week, numbers, it's spring market is here, and the numbers is going up, okay? It's that when you make the decision, this is the team that you need to consult with an open mind. What are the needs and wants, so that we can take you to your dream house and get to the closing table.
Yeah, absolutely. And really, I guess one thing that I tell all my clients that doesn't change, right? It's the home buying process it's obviously a long process, and it's a scary process. But we do this on a day-to-day, you know, we do this on every single day. And the biggest thing that we could tell you, and our clients will vouch for this, it's all about getting prepared, right? It's all about being ready, knowing what you're looking for, knowing where you want to go. And really the rest of that, like Tanvir said, you get a team of professionals around you that's going to have your best interest in, you know, it as their main priority. And the rest of that is very simple, guys. So don't be scared, right? We know we're going through some challenging times right now with everything that's happening, but this is the perfect time where you should take advantage of and start the preparation, start the planning. While you're sitting at home and you don't have a lot of work, you know, if your hours got cut back, take the time to reach out to one of these guys on the screen and get started with the process. We're here to help. Your best interest is our best interest. And really the biggest thing that we could tell you is don't waste the opportunity. The market in our area is always competitive. So there's never going to be that perfect moment to buy. Every case is different. So the best favor you could do yourself is to get informed, get prepared, save up your money, get the budget going and everything else. And, you know, one of the things, I'll go back, one of the things we didn't touch here is first-time home buyer incentives, right? Or first-time home buyer down payment assistance. And they're available, guys. You know, you hear me preach about them all the time. They're available. But really, we didn't want to leave this conversation with that, because the reality of it is those programs, and once again, you've heard me say this several times, they're not a one-size-fits-all program. They're not a program that fit the needs of everybody. They're available. They're an awesome product, but really it begins with preparation and getting you in the place where you make the best decision. And so if we come together and we determine that that best decision is to go with one of those programs, then we jump into it, right? Because the reality of it is, David, you could tell them there's strict guidelines, you know, there's income minimums as well as income maximums. There's locations that you can use those programs in. And, you know, maybe it is, maybe it isn't for you, but that's something that David can help you predetermine.
Yeah, absolutely. We do have our own grant programs where our lenders are giving down payment assistance, but again, there are parameters. Sometimes, incentive to get a grant upfront is good, but you might be stuck with a higher rate. The payment might be unaffordable. So what I entrust between myself, Mario, and Tanvir is we're going to look out for your best interest. Yeah, the cash up front that you're getting might look very appealing, but it's just a sustainable payment for you for 5 years. Because we don't want to just put you in a house so that we make our, we meet our numbers. Our goal is to help you to find your home and keep it. We don't want to be a part of anyone's demise and lead you towards making the wrong decision. So you'll get honest answer from us. You'll get honest advice, because at the end of the day, if you're going to buy, you're going to buy. Hopefully with us. If not, at least we could give you the right advice so that you're making the best decision. And that's what this panel is for. That's why we're having this conversation, to prepare and equip the buyers to make the right decisions for them.
Yep. My final words is piggybacking on what both of you said. Year over year, even for 20, 30 years, if you look into it, house prices in DC metro area goes over 3% year over year. So act now, act when it's needed for you and your family, and act it with the right professionals here. Please reach out to us.
Yeah, fantastic. And guys, once again, these guys both touched on it. Your best interest is our best interest. Your relationship to us is a lot more valuable than any one deal could ever be. So really, like David said, if you're choosing to buy a home in the near future, hopefully you choose us. If not, feel free to reach out. We're still going to give you information. We're still going to give you guidance. No hard feelings. What we're looking for is your best interest, and we're here. So once again, guys, David Yee, Tanvir Aziz, Mario Padilla. If you guys have any questions, please feel free to reach out to any of us. You know what? I'm going to give you guys my phone number right now, 240-694-8366. If any of you guys want to give it out, please feel free.
I'll give you my office line, but it actually comes to my cell phone too. But just want to, separate business and pleasure. It's 301-888-6959, extension 101. Again, it's 301-888-6959, extension 101.
And please call me at 202-352-6142. 202-352-6142. If you don't remember any of the other numbers, remember this, I'll get hold of them. Thank you.
Yeah, guys. David almost forgot his number there. I don't know if you guys.
I was like, wait a minute, I just said it.
Yeah, no, that's good stuff, man. Well, hey, listen, guys, I want to thank you for taking time on a Sunday afternoon to come and help me spread the message, give some positivity. We need it right now. There's a lot of stuff going on, and ultimately, we're all going to get through this together. And in a couple of months, hopefully, we'll be looking back at days like today, and we'll be on the road again. So, guys, for everybody that tuned in, thank you so much for checking in with us. We really love you guys. Hope you guys are staying safe. If you guys need anything, business or anything else, please feel free to reach out to any of us. We're here for you. Have a good afternoon, guys. Oh, David, one more thing. You got anything to say?
Oh,
David wants to tap elbows. There you go.
All right.
Fantastic, guys. Have a good one.
Bye.